Hi guys, and welcome to my channel Stocks with Stiles. First off, let me just give a quick disclaimer. I'm not a professional stockbroker, nor do I know all that much about the stock market in general. The real reason I'm making this video is just to share what I've learned and what works for me. I've had a lot of friends who ask me questions about the stock market, and this video is mostly just to share what I know and hopefully help them out to get started. So here you can see that I've been using the stock app Robinhood. This is the Robinhood home screen. Robinhood is a great app because it offers commission-free trades and it has a lot of other features like instant deposit. It offers trade options, after-hours trading, a lot of good features like that. Instead of charging commissions, Robinhood actually makes money through order flow, which is, to put it simply, when you buy a stock on Robinhood, you're always going to pay what's shown on screen. So let's scroll down. Let's see, I don't know what any of these stocks are, honestly, but I like bioscience. I like to invest in bioscience stocks. So if I wanted to invest in this, which looks like it's not a stock but an index, which we can cover in some later videos. But you see that if I were to buy this right now, I would be paying $7.31. Now, when you buy a stock, this $7.31 is not technically what the broker would be paying. The broker, in this case Robinhood, is going to be paying a little bit less than that, because usually the actual stock is trading for $7.30 point or 30.45 cents, something like that. There's also a lot of volatility, which is changes in the stock that happen every few seconds. So when they actually sell this stock, they'll make money off of that, which is good for you because it means you always know exactly what you're going to pay whenever you buy a stock, rather than having to hope that you get a stock at the price that you're trying to buy it for. This usually earns them less than a penny for every singular stock that gets traded, but when you're trading in high volume like a lot of people do, where they're trading, a couple thousand stocks at a time, then that really starts to add up. And that's the reason Robinhood really encourages trading more often. So there are some other apps. I might talk about Webull later. And Webull is a great app for day trading or swing trading, but because I mostly do options, Robinhood is kind of the only app that I can use right now. But we'll talk about that maybe in some later videos. Also, in the description, I'm going to put a link to Robinhood, and if you use that link, you and I can both get a free stock if you decide to get the app and invest. And that's pretty great. So now let's look at some of the let's just talk about some of the different types of stock trading. So we pull up Microsoft here, and the first thing we see is what happened today, which you can see that they're up 14 cents or 0.06% today. They're down 0.05% after hours. That doesn't mean all that much to us, honestly. But to look at different types of stock trading, let's first look at the most common type, which is the long-term investment strategy. Now, in the old days, it was common for somebody to just throw a bunch of money at a stockbroker and say, hey, invest this. And for that, the broker would usually try to find a nice, steady stock like Microsoft, and that's what they would put the money in, and they don't do anything with that money, and it just grows over time. So to show that, we can look at this graph, which is Microsoft over the past 5 years. You can see if you had bought Microsoft in 2016, you would have paid $55 a share, whereas now it trades for $219 a share. And a lot of that is just Microsoft being a major tech company. That happens a lot when you make smart investments, then you can get really high gains like that. But in general, all stocks are going to follow this trend of over time they're going to slowly go up. And that's the reason most people will say it's a lot safer to put your money in the stock market rather than to either leave it in the bank or just have it in a box underneath your bed. So this is a good strategy if you have a lot of money sitting around and you want to keep it from depreciating in value. But if you're wanting to actually gain money from the stock market, then I'll talk about some other styles of stock trading. So there's another one that is similar to this, but it's based around high dividend yield. So we'll go back here and we'll look at we'll see if we can look through some of the stocks I own. This is one that I bought just recently for this type of trading, which is the high dividend yield trading. So this stock, Horizon Technologies, actually offers a 9.10% dividend, and they offer it every month. So that's the main reason I bought this stock. I don't care about, my average cost was $13, so I'm technically down a little bit on this stock. I don't care about any of that because I know that over time, we can look at this 5-year graph, and over time, it's going to rise and fall with the economy. You see right here, this was the COVID crash, and all stocks have this COVID crash. This stock looks like it's been mostly steady throughout the years. It's a little bit higher than when it first started. It's recovering from COVID right now, so I figure it'll probably balance out at around $10, $11. But again, I don't care that much about all of this. I'm mostly interested for the dividend yield. So to show how this works, I've got this very simple spreadsheet. So basically, instead of investing in a large stock for this, you would invest in a stock that has a high dividend yield. And a dividend is just a company's way of thanking its shareholders, and it usually takes the form of a payout of a certain percentage of the stock owned, which it typically is just under $1 per stock. But that really adds up. So right here I've got examples of that. We have over here is ticker symbols, which is what you would type into Robinhood to find a stock. Right here is what they were trading at the opening of the day that I looked all this up. I did the math for how much money you would need to invest in 100 shares, because I typically trade in hundreds. Because of options, you have to trade in hundreds. This is the dividend percent, which translate pretty much directly to their annual dividend yield. That's how much money you get from every stock in a year. And this is how much you would get in a year for having 100 shares of that stock. So it's really pretty simple math here, but it's worth keeping note of and looking into, because let's say you've bought this one. It only cost $5.59, so it's really easy. You buy 100 shares for $500. Well, if you have more than $500, and that's $73 a year, and instead of buying in shares, let's say you just buy in dollars and you buy $1,000 worth of that stock. Well, now instead of $73 a year, you get $131 a year. And if you're somebody who's got a decent source of income and you're making maybe $500 a week, and every 2 weeks you can put $300 or $400 back, then that can really start to add up. I know personally, I try to put $500 into the stock market every 2 weeks or every week, depending on what bills need to be paid. So that means in just a year's time, let's say, for sake of conversation, because I don't want to have to do any math, even though I have a highly functional calculator right in front of me. Let's say I wind up putting in $5,000 into the stock. That means every year I'm getting $685 out of the stock. And keep in mind, I still have all of this money. it's just sitting there currently doing nothing, and at any time I can sell that out. Another thing we can do is we take this $658 that we've been investing, or that we've been getting from dividends, and we reinvest that into the stock. So now 658. So now the next year we get an extra $100 on top of that. When you move out of the long-term investment strategies, you start getting into the more aggressive strategies, is when you hear about people making hundreds of dollars a day. So the first one of the aggressive strategies that I'm going to talk about is day trading. And day trading is when you buy and share a lot of stocks within the same day, often for just marginal gains. So to show how this works, let's look at something I know is going to be pretty volatile. So as you can see, a lot of my stocks are some of the lower price stocks. So I'm going to scroll down and see what's over here. This is all just Robinhood news. I don't need any of that right now. Let's see what AT&T looks like. I haven't checked on them recently. So AT&T's down 2% today, which is not a huge move, but we can kind of see what I'm talking about here. So let's see if we can change the graph type. I'm not used to using the Robinhood online app. On the phone, there's a little button you can press, it'll change the graph type, but they don't have that online. But they do sort of have it down here. But either way, so we've made this graph full screen, and you can see right up here's the price, right up there's the volume, and day traders look more at the volume than the price because that tells them where it's going. So you can see in a day just how much this fluctuates. This has a low at 9 a.m. of 29.74, but then it goes back up all the way to 29.90. So if you're a day trader and you're trading 100 shares of that for just a few cents increase, you can make hundreds of dollars in just a few seconds. But again, you have to have really high capital, and you have to be able to constantly pay attention to this stock and constantly be watching it for it to go up or down. So it's kind of a risky strategy. And a good example, if you buy, say, 1,000 shares of a stock, and the stock goes up by 1 cent, which here you can see it's going up by a lot more than that. We can look at some of the other stocks that I like to trade, some of the smaller stocks. These are a little bit higher than penny stocks, but some people would still call them penny stocks. Let's look at this gold stock. It's gone up and down by 5 cents today, just right there. Almost 5, yeah, 5. A little over 5 cents, which is something that when I was day trading I would have loved, because buying 100 shares of this and it going up by 5 cents and then selling it, which here it does the opposite, but right there it goes up by 5, so that's a perfect example. So if I were to buy it there and then sell it right here for only a 5 cent increase, then I've just made $50. And then I turn around and do the same thing again a few hours later when it goes up by 3 cents and I make $30, or I could have waited for 4 cents. You just have to really be able to watch the trends. There's a lot of risk, because when a stock starts to change long term is when things go poorly. So here's a 1 month graph of the same stock. Let's say I'm day trading here on November 20th, and I buy the stock at this low price of $7.50, and I miss this sell-off. I miss this 2 cent sell-off. Then for an entire month, well, not an entire month, but for it looks like a full week, I'm losing money on that stock. So that's where day trading can be dangerous, and I've actually got a little bit of a scar on my account that I'll show you guys if it'll show up. Oh wow, it doesn't even show up on the online version, but I do have a stock. It's this stock right here. It's not loading because it's no longer on Robinhood. I bought 100 shares of the stock because it was trading for just a few cents and it was going up and down by a lot, so I could buy in at about $50 and then make $50 off of it just by selling it at a few cent increases. So it was a really good stock for that, but the problem was I didn't realize at the time that typically stocks that are trading for under $1, especially under just a few cents, are struggling stocks, and that's usually very bad. I didn't see the signs because I didn't know the signs that this stock was going bankrupt, and if you look at my all-time graph, you can see that up until very recently, I was just steadily losing money, even getting down as far as almost $500, whereas now, since I've switched strategies, it says I'm up $14 right now, but that's not technically true, and I'll explain how that works in another video. So, for the next trading style, let's go back to our stock, which was, I don't remember what it was. Yes, it was this one. Let's go back to our stock, and instead of looking at this 1 day margin here, let's look at 1 week. So this is called swing trading, and it's basically the same as day trading, but over a larger period of time. It's a little bit safer because you get to see fuller trends, but it still has that downfall of if the stocks decide to crash, then you're losing a lot of money there. So let's look here. If you were a swing trader and you see this stock going down on December 14th, let's say you see it going down over here, you're not going to buy it at its lowest price because you want to get in on you don't know when it's going to stop, you want to get in on it. So you buy it at $6.95, it's going down, and it goes back up over, let's say right here, because again, you don't know that it's going to hit this 770 peak. So you bought at $6.25, you sell at, say, $7.25. You've just made, $6.95 and sell at $7.25. You've just made You've just made 40 cents on each stock, and if you had 100 stocks, that's $40. So these small gains really start to add up in the long run, and the more you put in, if you'd have bought, 1,000 shares, then instead of $40, you're getting $400. So the more money you put into it, the more money you can get out of it. So we're running low on time on this video, so I do want to mention the last trading method, but I will also say that this method is by and large the most confusing, so I'm definitely going to have to do a separate video on it later. And I'm going to just look at Pfizer here for this, and this is actually what I do. So right over here you have the trade options button, and when you click that, it pulls up all of these options, which don't make any sense if you don't know what these are. But an options trade is basically, instead of an option, you can think of it as a contract. So if you want to buy something, you want to buy a contract. So I typically sell, because when you sell, what happens is, let's say I want to sell a put. So selling a put, which calls and puts I'll explain a lot more in detail in another video, because they're just, to me, they're very confusing. And to a lot of newer investors, I think it's very confusing. But if I want to sell a put, then I am selling somebody a contract that basically says at the end of this contract period, which is December 24th for this one. Oh, Christmas. At the end of this contract period, I will buy stocks from them at this strike price. So we look at right now, Pfizer's trading at $37.83. So if I were to buy this, then I would be selling somebody a contract that they don't have to execute. They can choose not to sell me these stocks, but I can't choose not to buy them. But I would buy this, or I would sell them this contract. I would make this 67 cents, but that's per share, so I'd really be making $67 off this contract. But come Friday, December 24th, I have to buy 38 shares. December 24th isn't on a Friday, is it? I'm used to weekly stock options, and this one's not weekly. But it remains the same. So that's the reason they have this break-even price. That's basically how much the stock is minus how much they're paying you to buy it. So the reason I really like selling put options is I sell them on stocks that I want anyway. So let's look at one of my high dividend stocks that I was talking about earlier, this Horizon Technologies, right? Let's say I want to get more of this, so I want to sell a put. Its current stock price is $12.99. I can sell a put for $15, get $223 from that, which would basically be the same as buying it for $12.77. Now, I mentioned that my graph is not fully accurate, and this is the reason. Because it doesn't say that you bought the stock at $12.77. It says that you were paid $223, and then you bought a stock at $15. So if I were to do that right now, it would count that as a huge loss on my part. Because it would be saying I lost almost $2 on this stock per share, which is quite a bit. But in reality, I've actually gained money if I sell it off immediately. So that's what I do. And then let's say that executes. I do have that stock. I now have 100 shares of this. I switch to selling a call, which is selling somebody the right to buy your stocks at a certain price. So let's say I bought them at that $12.77. Well, now I can sell this $12.50 call, and somebody will say, oh, if the price isn't below that, then come January 15th, I can go ahead and sell that, or I can go ahead and buy all of his stocks for that amount. But really, because they're paying me to do that, again, it's like I'm selling it at $3.18. So I'm still making a profit that way. So I will definitely talk more about stock options in the future. As you can see, I didn't cover, or as you noticed, I didn't cover any of the buying the options. And that's just because I don't do that very often. And I want to do a little bit more research on it because I'm fairly well versed in what it is and what it means, but I just want to make sure I'm bringing good fresh information. So before my next video, I'll look over all that some more and I can talk about the different option strategies. But for now, that's all we have for today. If you found this video informative or entertaining, then please consider subscribing, liking. If you have any questions or there was something in the video that I might have got wrong, then please feel free to post that in the comments. As I said earlier, I'm definitely not a authority on stock markets and strategies, but I just wanted to be able to share what I do know with my friends. There are also some other stock YouTube channels that I like to watch that if I remember, I'll link them down in the description, and if I don't remember, then somebody will probably remind me and I'll make them a comment or edit that later. But for now, that's really all we have time to get into. I'll work on making some more videos in the future to hopefully explain some of the topics that I was not able to fully explain this time. So thank you so much for watching. I hope this was informative. I hope this was helpful. And I'll see you all again next time.